Good morning, everyone, and welcome to this morning's webinar. Apologies, there's only one topic of conversation today, obviously, with the election here in the UK, and we've just sort of stumbled across a couple of items of news, which are actually quite significant. So we'll share that with you as we move through the webinar, and of course, everything else that is going on as well. It's not just the UK election, but given that the pound is such an important currency in this market, it obviously is going to have a huge impact on cable and obviously the other pound pairs. But as usual, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen, and as we all know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. As usual, I'm joined by my husband David. He's actually sitting behind me. He's looking at some charts, and he's looking at, are you looking at the spread betters, David? Right, yes. One of the ways we have, those of you who are not based in the UK or Australia may not know, but here we have, you can, what's called spread bet. You can bet on sports, you can bet on, basically you can bet on any event you can think of in the football or soccer. I think you can bet on who's going to score the first goal, which team's going to have the first corner, etc., etc. And the odds are then placed on, and away you go. And they've done that with this election as well. David can explain a little bit more, because that used to be his passion when he was much younger. Well, horse racing was anyway. For the rest of us, we're going to be looking at the forex market, seeing what's been happening, what is happening today, because this is really the kind of last week before Christmas. As we know, we've had the FOMC yesterday. Dollar had a big sell-off. Gold went up. Bond yields went down, and the equities indices went up. And it was actually, as I said on my Facebook page, it was a really, really nice expression of what David and I teach in our Forex program, and that is to be able to succeed long-term in this business, we have to understand how all the capital markets interact with each other. Forex very much sits at the center of the market, and how they all, what these cross-market relationships are. So when you have a move in one, how that is going to impact a move in another. And you say, well, I'm only interested in Forex, so what do I care if gold goes down? But you can inverse that, because we say, well, if you are going to trade gold, and on all MT4 platforms and MT5 platforms, multi-asset platforms, you do have the opportunity to trade other assets, such as gold. I mean, I just quickly look at what the market watch window is on this particular platform, and you can see here, I can scroll down. These are the opportunities you get, other markets, even down to individual stocks. So understanding what is happening when the FOMC meets on their regular, they have a regular schedule of meetings, and it's going to impact the dollar. That movement in the dollar is going to have an impact on maybe a chart, an instrument that you are looking at. It's all explained in great detail in the program. And as I said last week, there's a lot of information, there's a lot to take in, but you have to start at the, it's like unraveling a piece of a knot, a ball of string. You start with one small piece, and then you gradually work your way through. And we always start with a chart. We look at the technical analysis. The technical analysis that we explain is based on volume and price. That's price action with volume, and we've developed a whole suite of indicators to help us, to support the volume price analysis methodology. It is a methodology, it's the basis, it explains why price moves in the way it does, what you can expect, how you can anticipate that, and then the indicators are then there to help us. I was asked actually on my Facebook page, because I put a post on, this is on the forex trading page, about the currency strength indicator, which we can see here in multiple time frames. We've got the 3-minute, the 12, the hourly, and the day. And the comment was, reasonable comment, you know, it was lagging, it would lagged, it had no, you know, basically it was a currency, he called it a currency strength meter. And, you know, what could it tell you? Because indicators lag. Well, indicators do lag to some extent, although some of ours that we have developed, the ones, particularly the support and resistance one, the accumulation and distribution indicator that we have for NinjaTrader, they are what we call dynamic. In other words, they update in real time. Now, getting back to the CSI that we have developed, and he really wanted to know, well, what have we done to kind of mitigate that? Well, there's all sorts of things we have done to mitigate it, but I wasn't going to tell him on my Facebook page. That's our proprietary software. But that aside, what is this indicator telling you? Now, I have the hourly chart here in front of me, and one of the things it tells me, because the forex market is really 3 separate sessions, and we're just moving out of Asia Pacific. Europe has started, and now we're waiting for London to start. So what do these lines actually tell us? Well, it tells us, you know, what the individual currencies have been doing. So we have captured here, we've got the sharp fall in the US dollar. We've had it has attempted to rise, it's fallen back again, and because it's so overextended, you know, you do get an oscillation, you get a reversion back to the mean for all currency and currency pairs. So it is now rising. It's not rising with any great conviction, but we know that after the FOMC, that is what is the indicator is telling us. So it's telling us where the flows have been in the session that's going. It's kind of setting up, saying, you know, is that going to continue? For that, we have to look at a faster time frame. Then this is how you, if you like, you overcome, if you like, the lagging element in any indicator. You have to use multiple time frames. So the hourly is the one that as I said, it gives me the quickest look into what is happening, you know, in the session that's gone, where they are in terms of overbought and oversold on an individual basis, because if they are at an extreme, then they're much more likely to you know, to move, to do something in the time frames that I'm actually interested in taking a trade. And they are, my time frames are the 3 to 4 minute, the 12-minute, and my Renko chart, and you'll be able to see that when I put up the profile of a pair that we will be considering today, and certainly the pairs that we've been looking at. I've been monitoring, following on my, as I said, my Facebook page, which is Learn Forex Trading. What this indicates, but this indicator that we've developed is actually much more sophisticated. That is only on one level, because when the lines are not in you know, they don't have any sharp angles, or they haven't reached this state of overbought and oversold, and they're kind of all bunched here in the middle. It also tells us that really there's not a lot going on in the with those currencies at present, and this is actually quite important, because although we've had volatility in terms of for the pound because of the election and Brexit and what have you, and you will get movement and volatility when you have something like the FOMC. And today, by the way, we've got the ECB with Christine Lagarde. It's her first, so it'll be interesting to see what she says. In general, this market, and certainly for the last few years, has not been as lively, if you like, as it has been in the past, and that volatility causes, you know, causes problems. And I'll show you a link that I've that was on, I think it was on Yahoo Finance, that even the institutional trading desks have had an absolutely disastrous decade of trying to trade the forex market. And I find that quite extraordinary, because, you know, we have users, and David and myself, and users of our tools, we know forex traders who have been doing very well at our end, at the retail end, and can't understand why these guys have made such a hash of it. But anyway, that's by the by. What this indicator also tells you is we have the extremes, as I said here. We look down to the the faster time frames to see if, in fact, the moves that look like, for example, this yen is moving, is moving lower. When the yen, to get back to the cross-market relationships, the yen moves lower, that's good for risk assets. Now, I happen to know that because it came up on my newsfeed, that China has, they've said they've bought some, so I think some soya beans from America. So that kind of news the market wants to hear, because we've got the tariff discussions, wars going on in the background. That's going to impact the yen. The yen is one of these currencies that is sold when the market is willing to take on more risk appetite, and is bought when it is the opposite. Again, all explained in the program. So the hourly tells me that. And in terms of the faster charts, we can see here, we go onto the 3-minute, we can see the move lower in the yen, and it's actually been a really, really sharp fall. Now, that's been falling, so we want to know, well, what has it been falling against? Where would the best trading opportunity have been for the Japanese yen? And I think David's been looking. Has he been in the pound, David? Yes, and in fact and he's been looking at that. So now the pound here looks like it's kind of flatlining, but possibly this is certainly in there's been a fall and some flatlining and possibly going up. But the faster time frames, that's how you use it. You say, yeah, that's saying what the hour is doing. You would use it in multiple time frames. It's not rocket science. Now, what these lines also tell you is when the lines are moving in the same direction, that also gives you insight into what is happening on the chart, because it's likely that particular pair is in congestion. And by congestion, doesn't have any firm direction. So it's either waiting for a particular event, such as the FOMC, the ECB. It's the time of day. It's a pair maybe that isn't particularly traded very much in that particular session. Again, you have to treat this 24-hour market as 3 distinct trading sessions, each with their own characteristics. They all have their own local fundamental news, and above that, you will then have the impact of the other markets, global news, and each of these currencies will react in a particular way. And if you don't understand that, just by looking at one time frame in one chart, I'm not saying you won't be able to see a technical setup and you will be able to take a trade, fine, but then something will happen in one of those other worlds, if you like, that will impact your chart, and suddenly you think, oh, well, why has that happened? And as I said, you have to have, we believe, what we call this 3D approach to trading, although we have said there's politics, and then Donald, who's a dimension of his own, he lives in a universe of his own. He, although his influence has kind of gone down a bit, David, lately, haven't it? Partly because I think the market kind of have cottoned onto his kind of playbook. And behind the CSI, we have developed what we call the matrix, and that is, it ranks the pairs, takes the individual currencies, pairs them, which of the pairs have been moving most strongly, and which are still in the middle, perhaps in congestion. Now, the values on the matrix here are also quite important, and we're actually doing some work on making this indicator even more sophisticated, because at the moment you can see here the Aussie yen. Now, the Aussie yen is classic Chinese news, risk, combining, pushing the pair to the top of the table. But look at that number. Now, that number, what we haven't got at the moment, we don't know whether is that a strong number for this time frame, or is it an average number? And I happen to know, because I use the indicator, is these values can go up to 50, 60, 70, 80, and that also tells us that there's been a degree of momentum in that move. When there's momentum to an extreme number, that is also telling us that there is, there is the potential for a reversal trade. So in answer to that, inquiry from that gentleman said, well, it's lagging, it doesn't have any value. In fact, this indicator has a lot of value if you understand how this market works, what the information is telling you, and it's either, if you're in a trade already, it's, anticipating what possibly could happen next. VPA also helps you as well, but more importantly, it perhaps keeping you out of a potential trade. If you, for example, if I don't know, if Aussie Shift is your particular pair of choice, well, it's at number 10 at the moment. It's stuck in the middle, whereas the Aussie and the Shift, and we can see here the lines are kind of moving together. We can see here there's no clear divergence. And here, is it going to diverge? It's not quite ready. So the information is there. It's how you use that information and interpret that information. So, as I said, in answer to that comment, what is going on at the moment, and looking for a particular move, because most of us are intraday traders. I like to, there's a few pairs that I like to trade. This is what we suggest. You really get to know a currency pair, so you know what is likely to move it at a certain time of the day, certain time of the week, in certain months. All these pairs have what we call seasonality, and as you gradually become more experienced, you really do get to know them. You say, right, okay, it's does cable move more at a certain time of the day, certain time of the week? And in fact, the actual data is available over at investing.com. It makes very interesting reading, down, and they take it down to the kind of average pip value that you can get at certain times. So all sorts of information that you need to pull together before, to help you become consistent. So I'm going to pass over to David. He's going to explain a little bit more about what's happening with the pound. Obviously, today it's going to be quite volatile. I've got the euro, and particularly, the euro Aussie, which I have written about on, as I said, my Facebook page, the Learn Forex Trading. Euro Aussie yesterday was amazing. This is the 4-hour chart, and let's go to the daily one first. And just expand that for a second. There we are. Here we are. This was the candle yesterday. A really, really big move in Euro Aussie. And if we look at the daily chart, just for some context into the range that this pair moves in, it's actually been in this congestion phase for quite some time. We can see here, this is what we call the volume point of control. This is an indicator which again moves in real time, and it's based on the principles of support and resistance, but with the added element of volume and time. And this is, as I said, this congestion phase, also an expression of Wyckoff's second law. The longer this pair is in this phase, i.e. just broadly moving sideways, although with big range in the individual candles. So if you're trading on the faster time frames, the longer this stays, when there is a firm move one way or the other, that move is going to be very significant. Now, that was yesterday, and it was lovely, and you can, as I said, you can read the analysis and what have you on that page. But like everything else, it was very overextended on the CSI, and we need to know, well, where is it going to stop? Everything comes to a stop. And in fact, we had to move up to the 4-hour chart to give us an idea of where it was likely to pause. And this support line at 61.45, 61.46 is very, very important, because this is where it's bounced off from. And in fact, it did duly bounce off. And, for the traders on the faster time frames, they would have been trading opportunities certainly in this candle. This is quite a dramatic went down. That was in Asia, possibly as a reaction to some kind of news to the Aussie dollar. But let's move that back down to the hourly chart, because that's really what I tend to focus on. And the Renko then picks up the moves, smooths out the volatility that you get with momentum, the pullbacks, the corrections, And you know, this is a typical profile that I have for all the pairs. And what I look for based on that, so this is really interesting setup at the moment. We've got a certain amount of congestion here on the 3-minute chart, has attempted you know, to rise, gone straight into the VPOC. A lot of volume going under that candle there. We can see here, you know, little wick to the top, little wick to the bottom, bang into this level, very strong level of resistance, and now it's going to try and move lower. We'll have to wait and see. It's one of these ones, a little bit of patience here, a kind of, you know, setting up to be a nice breakaway if it manages to, if that resistance line holds, that volume carries on higher for a potential sell. And what I'm looking for here as well, reflected in the Renko, the value of the Renko is 1.4. This is actually set on an ATR, average true range, so the indicator actually tells you what, you know, the optimum value of that brick size. It's the only indicator of its kind for MT5. You can set it to a fixed value, so if you wanted 4 pips, you just change that to fixed, but I leave it on the ATR and just let the indicator pick up the speed of the market and give, you know, spit out a value, as it were. So what am I waiting for here? Well, there's obviously this support line here. If it breaks through there, this is changing color. This is the trend monitor. That also have to wait for the dots to change. They haven't. We've got 2 gray, we've got a red. We certainly haven't got a consistency between the trend dots and the trend monitor. And looking at the time chart, we can see here it's still up at this this resistance here. It can't seem to go higher, but neither does it want to go lower. Looking at the 12-minute, where am I here? Where's my where am I here? Well, we've got the congestion here. There's a lot of volume-based congestion that we can see here on the back from the histogram. In fact, I've got the VPOC down here at 61.57. If this carries on building in the way here, this will move up. Now, if it does on the 12-minute, that is actually more bullish, if you like, because there is support coming in from a volume perspective. If that were, for example, if this were, if it were the other way around, the VPOC also can help us with whether to give us a sense of where this is going to go in terms of direction. And of course, we go back to, where are we? Here we are. This is on the hour. So what are we looking at? Euro and Aussie. Well, this is exactly what I said. They're kind of together at the top here. There's no strong divergence. Let's go on the 12-minute chart. What have we got here? We've got the Euro sort of falling. That Aussie's trying to move higher, as it were. You know, so, but there's not a lot of movement. But look at the yen, that's been moving strongly. So clearly what it's telling us, there's been a better opportunity in another pair. Right, I'm going to pass over to David, talked long enough, and let's see what he's been, because as I said, he has been looking at one of the yen pairs. And just quick look at where it is on the here. Let's turn that, Euro, Aussie, where is it? Yeah, it's a spot 20. So it's, you know, it's neither fish nor fowl at the moment. So patience is the order of the day for that particular pair. I pass over to you.
Yeah.
Brilliant.
Hi everybody. Sorry, I was just asking Anna a question about the election. Just checking something for me.
Well, it was on Twitter. It was all too hard on Twitter yesterday. Yes.
Right. Okay. I'm just getting that back from Anna. Very warm welcome to you. Good to see you, and thanks for joining us so early in the morning here. Hope it's might be the afternoon, evening, or middle of the night where you are. So good. Great to have you with us. I've just really been tracking around on the pound. This is on the pound yen. Across the time frames, I've got the 1 minute, 3 minute, and the 5 minute at the top, and then I've got the 15 minute, the 60 minute, and the daily down at the bottom. And for those of you here, I think it was last week, or maybe a couple of weeks ago even, amazing how the time goes, I was highlighting the fact that at the time, this is back to really October, the middle of October, when we had the launch of the election campaign, which is polling day today, and really on the daily chart oscillating around the volume point of control. And as Anna highlighted on her charts, it's all about time and the relationship between how long a market is in congestion. It's all about Wyckoff. The longer, it's about cause and effect. The longer a market is in a congestion phase, then the more dramatic is likely to be the breakaway once it occurs. This is starting to now build. We talked about tactical approaches using options for volatility. The question that really will be answered, obviously tonight we're going to be trading through the night because it's a great opportunity for volatile markets and really tracking it in several different ways. I'll go on to the odd sites in a moment. So we will be here pretty much 24/7 today and trading this ourselves as the polls come in, or as the results come in rather. So it's the question that you have to try and address with regard to the pound, certainly over the next 24 hours, is to try and get a feel for how much has already been factored into this particular move. I think longer term, if there is if the Brexit situation is resolved, in other words, if there is a majority, a reasonable majority, a working majority at any rate, to get the Brexit situation resolved, then that should be pound positive. The reaction in the pound will very much depend on the strength of that majority, if it's wafer thin, or if there's any prospect, certainly early doors, of a hung parliament again, which we've had up to date. That will certainly be negative. And the way the results come out, I'll just pull this up. Got a few of the betting sites here. The thing to watch for if you are trading this, or you're going to be monitoring it and potentially trading it, is the first sign that comes out is 10 o'clock UK time at bang on 10 p.m. UK time, which I think is 5 in the afternoon Eastern Standard Time. That is when, first of all, the polls close, but almost immediately thereafter we get a thing called an exit poll, and that is based on polling from those voters who've cast their votes and being questioned or surveyed as they leave the polling stations. It's generally a pretty good monitor of, or an indicator of, the likely outcome. It's not perfect. It's like all the polls, nothing is perfect. The complicating factor in this election, which is unlike any other, is the amount of tactical voting that is likely to take place, and that's what all the polling companies have been struggling to understand, or to interpret at any rate, because that is likely to influence, and it really is on a knife edge in terms of how much tactical voting goes on to vote one way or another in order to ensure that a particular candidate for a particular party does not win that particular seat. There's a whole raft of seats in this country which are very, very tight, a matter of a few percents either one way or the other, and it's really been very, very difficult for anyone to get a real good handle on what is likely to be the outcome of this election, purely because of Brexit and the tactical voting opportunities that are now available to everyone in the country, should they wish to do that. So it's not straightforward. In previous elections, maybe not so much the last one, but certainly in a general election, it's more straightforward to call the result. This has been very, very difficult. The polls have generally been suggesting that there will be a Conservative majority. It's been quite a large number. It's in the last week or so, it's been narrowing quite noticeably. This is basically the spread. This is spread betting. So these are forecasting the number of seats that the Conservatives are like to win, 338, 344. That's been pretty much consistent for the last week or so. It has been as high as 350, 360 even. I don't think it went much lower than this. I think it went down to 335, maybe 332 at one point. In terms of Labour seats, 219, 225, that's the spread for them. At one point that did go sub 200 early in the campaign. This is a 6-week campaign, so 5 or 6 weeks ago, I think they were polling around 199, 198. A lot of people were placing bets on that, but that's increased. There has been a clawback, so that's now 219, 225, and that's pretty much what the spread betting companies are en masse are quoting. The other seats down here, you've got the SNP, you've got Lib Dems, Plaid Cymru, and Brexit, and the Green Party's down here. And then you can take a spread on whether it's 300 and up, 325 up, 350 up, so on and so forth, 400 up, very long odds on a 400 plus. If you go over onto, this is another site I monitor a lot. This is oddschecker.com. Used to use this a great deal when we were looking for arbitrage opportunities in racing. Which is an interesting concept. It does work, but you do need an awful lot of betting accounts to do it. But certainly in the horse racing world, you do find discrepancies in terms of odds. And basically, on an arbitrage opportunity, you can place a no risk bet. In other words, you can make money without any risk whatsoever. But they're few and far between, but you can find them. They do occur in other markets. So this basically lays out all the odds across the primary betting companies for the UK. These are conventional odds, so this is the longest odds at the moment. This is offered by, who's that from? That's from Bet365. That's a 1 to 50 odd. Most seats for the Conservatives. You can see the other odds down here. They vary between 1 to 20 is the shortest odds being offered at the moment, up to 1 to 25, 133, 144, etc. So basically, you bet £1 and you win 20, 30, 40, 50 pounds. Sorry, you bet the other way around. Beg your pardon. You bet 50 to win 1, which just gives you an idea of the length of the odds. These are the odds for Labour, varying between 10 to 1 and 14 to 1, got out to 16 to 1 over here, and the Lib Dems, very long odds indeed, 200s, hundreds, and you've got UKIP and the other parties down here. So it's just a great site to keep an eye on what is going on. Another good site to watch is Betfair. This is decimal odds, this is not fractional odds, so this is basically giving you an idea of how much money you like to win. Again, this has been pretty consistent. This is Conservative majority, no overall, Labour majority, and it pretty much reflects, obviously, the odds being quoted by the conventional betting companies as opposed to Betfair, which is a peer-to-peer betting company, if you're not familiar with it. Basically, this is people being matched to either back or lay odds on particular events, and you can see up here the amount of money that's been laid on this particular event. There's over 13.5 million riding on this right now, and that'll probably go up quite dramatically during the day as more and more people come in and place bets or lay bets on the market. So that's betting in running, and that's pretty much a standard fare nowadays for various markets. Just drop that out of the way. Okay, we're now coming, where are we? We're 5 minutes past 8. We're coming into the London Open, and as always at the London Open, you're always looking for reversals, reactions, trap moves. It's what we're seeing right now. It's just a classic. People have been buying this market, and now we're starting to see London open up, volume, big pickup in volume, and a reversal taking place. And if we go on to the CSI, and we just highlight this all the time, you know, when you're going through, oh, sorry, wasn't that loading? I want to come off that, sorry about that. Let's just go back onto the chart for a moment. I don't know why that's loading like that. The importance of understanding, you know, the session crossovers. This is where we are. Got this on the 1 minute. This is the nice thing with Ninja is, unlike on MT4 and MT5, it does print the local time for you, so it's very easy to highlight where you are. This is Europe, so this was Europe opening up through here, pretty much all of this session here, so we can compare volume through here, get a good idea of what's going on. But then as London opens, bang, we get this big increase in volume as the market gets underway, and we get a strong reversal taking place. And it happens time and time and time again, purely because you're getting the market makers are stepping in. Let's move up onto the 3 minutes. Nice widespread candle, good strong volume under that, repeat of that. There's no wicks to the candle, there's nothing to signify any buying at the moment, so there's just heavy selling of the pound right now, certainly against the yen. What's interesting now is we're coming down to, you can see the transitional change in the trend monitor. We had this nice rally through from early doors. We were up around 6:30. We've had this rally. Now we're looking for congestion into the pre-open for London, and now we're into the London Open. The trend monitor is reflecting that. The trend line is diving. It's two indicators in one. So you've always got the view of not only what is happening in terms of the trend on the trend monitor, which is now transitioning through the color sequences, but also the trend line, which is diving below the midpoint here. So it's giving you a sense of strength of trend, the angle of the line, pretty much in the same way that the currency strength indicator does, and it just gives you that different perspective as well. What we're moving to here, and this is another facet of what Anna was pointing out on the volume point of control. We have this low volume node here. Now, as we approach that from a trading perspective, what we're expecting to see is the market move through there pretty rapidly, because volume works in exactly the same way, or you can interpret the volume profile in exactly the same way as you would with support and resistance. It's just from a volume perspective. So if you've got a low volume node as we had here, then your expectation as the market comes off this congestion phase and starts to break is that it's going to move through this region pretty rapidly, because there's nothing in the way of volume to act as a support platform at that point. So from a trading perspective, it's just a great way to look at volume on the histogram and say, terrific. The market is like to move through this pretty rapidly, and it has. That's what you expect. Now what we expect to see, because we've now got volume building and we're now moving towards the volume point of control itself, which is here, the expectation is that we are going to see some congestion at this point, purely because we've got the volume point of control. In addition to that, we've also got these levels here these are price-based congestion regions. This red one and perhaps this blue one over here, which is hidden under here, but here. These are levels of potential support or potential resistance based on price. They work in exactly the same way as they do on the MT4, MT5 platform. They're just presented slightly differently. On MT4 and MT5, as you saw on Anna's side, they appear as solid lines or dashed lines. The solid lines are much stronger. The dashed lines are a little less strong. And where you get clustered of them, then that increases strength. So if you've got a cluster of solid lines, that is a very strong region. Or if you've got a cluster of dashed lines, that's a strong region too. This works in a slightly different way on accumulation distribution. In other words, the lines here are presented more wide. The width of the line is wider to represent the strength of those regions. So the wider the line, the stronger the region, in other words. And that's done automatically by the system. So every time this is tested or holds, then it increases the width of the line. So what we're seeing now is we've had a bit of congestion around here at the volume point of control. And now what we're seeing is the transition through the trend monitor through to full red. So we've turned very bearish on this market for the time being on an intraday basis at any rate. Trend line is diving very strongly. We're also coming down here to some low volume on the volume point of control. So, and in addition to that, we've now, assuming this candle closes below this region, we've now got the volume point of control itself above. We've got this region of what was support on this candle is now acting as resistance, pressing down. And when we went through this region, we also broke through this potential platform of support, which was breached. So there's a lot of downwards pressure right now. Just wait for that candle to close off in terms of the volume profile and see what we've got going on. Maybe a little bit of buying coming in. You can see the wick here. It's just forming. We've just got to wait a minute or so for that to close off, and then the volume will come in. The reason I don't have this volume appearing in real time is for no other reason. I've got a lot of data coming in on the system, and obviously we're broadcasting live, and I just want to keep this to the minimum. So this will close off on the candle close. There we go. But you can change that on NinjaTrader. You can either have it coming in real time, or you can just switch it off and only complete when the candle closes. So we've got good strong volume under that. So further selling, a little bit of buying coming in there, but probably nothing to frighten the horses. We've now got a low volume node here, so we're looking for some further downside momentum for this market. Going back onto the 1 minute, see what we've got there. Okay, we had a little bit of buying coming in here, but that really just reflected the fact that we're at the volume point of control on the slightly slower time frame chart, and it's another reason to use slower multiple time frames in whatever you're trading. However you're trading, it's a question of using the multiple time frames to give you that all-important perspective. The analogy I've used so many times before is the pebble in the pond. This is what it's about. You throw a pebble in the pond and the ripples from that effect move out. It's exactly the same in trading. We're on a fast time frame here, and what we're seeing here is if this is a reversal in a nice strong reversal in trend, then that is going to ripple its way through across the time frames. It'll be reflected in the trend monitor, it'll be reflected in the trend, it'll be reflected in all sorts of different ways, and it just gives you that all-important perspective. These are great candles to watch for in any downwards market. What's happened here, we've got good strong volume under that candle. The market tried to rally, bit of a wick to the upper body, so the market's desperately, it's trying to get higher, but it can't. It falls back, it's exhausted, it closes down here. It's what we call a water-filled balloon type of candle. In other words, you fill a balloon up with water, gets heavier and heavier, and it extends and gets very distended, and then ultimately it breaks and the water gushes out, and on you go down to the next level. It's that sort of principle. Little bit of buying coming in under that candle. What's interesting about those last three candles as a group is we've also got falling volume under there. And what that's telling us from a volume price analysis perspective is that where we have a falling market and we've got falling volume, then the pressure, the selling pressure, is diminishing, and we expect to see a little bit of a rally, which is precisely what we're seeing, and that's the reason why. Because markets take effort to both go up and fall. A falling market requires effort. On these three candles, had we seen this volume rising, then that is indicative of further strength to the downside. In other words, increasing selling pressure. So we've got increasing volume. In other words, the selling pressure is increasing and the market is falling at the same time. That's what you want to see, because it's just confirming the fact that the market is not going to reverse. It's just confirming the fact that the selling pressure is rising and the market is falling in line with that. That is not anomalous. This is anomalous. So we've got falling volume and falling price. We want to see the reverse of that, which is rising volume and falling price if the market is going to continue lower. So we've now got this little rally going on, which is what we expect to see. In a rising market, you want to see rising volume. And that, I think, is more intuitive, purely because we all understand the concept of gravity. So to get something off the ground, it takes effort. But it also takes effort for a market to fall. It's exactly the same principle. Really nice break away from the volume point of control here. You can see how this level here capped off the efforts to rally. Very strong region of what was acting as price resistance there. We've had this little rally, tried to move higher. Good volume under that candle. Looks very toppy. It's not the rally there is not looking particularly strong, and it looks as though we've got some more downside momentum to come in the short term. Just have a look at some of these slightly slower time frames up onto the 5-minute. What have we got going on here? Little bit of buying coming in here. We've got a very strong ceiling of resistance now in overhead in this blue dashed line, so that's very strong. We've got the volume point of control as well, pressing down. If this market is going to break further to the downside, then the level really you want to see breached is this very minor level. This has been tested once, where this little dashed line is here, the very thin line. It's been tested once so far. If this price candle holds again, then this may well increase to 2 and so on and so forth. That's basically how it works. But in terms of the volume histogram, any move through this region now, and we're into another low volume node, and you expect to see a further downside move in terms of the shorter term. And what's interesting when you drop down onto the 15-minute, and really just reinforces the whole point I was making about using multiple time frames, just squeeze this out. We've got a volatility trigger. What does the volatility trigger indicate? It generally indicates that we're either going to see congestion building, or we could well see a full-blown reversal in whatever the trend direction is at that particular point. But at the very least, you are expecting something to happen. The reason is very straightforward, because when volatility occurs, it's almost always associated with market maker participation. Sometimes you get a trap move where the volume is low, but generally speaking, you'll see market maker participation in terms of the volume. What that means is that the market makers are laying the ground for a trap move. And the reason for that is very simple. because when you see fast moving price action, your instinctive reaction is to jump in. Everybody does it. We're hardwired that way. We can't avoid it. It's a fact of life. It's all to do with our evolutionary process. So when the markets jump, you want to jump with them. And the danger is you then get trapped into a position which may not necessarily end up as a losing position, but will certainly cause you emotional pressure because of the congestion phase, which inevitably will follow. It doesn't always, but generally it will. And that will cause you emotional stress in terms of, have I made the right decision? I don't know. And the longer that goes on, the greater that pressure is. And ultimately, you may well close out. You may well sit through it and wait and be confident that you have actually taken the right position. But it's a very simple mechanism that is used all the time. And again, it just reinforces the fact that when you're using multiple time frames, as we are here, the fact that we've got a volatility trigger here is now giving you a clear sign of the question that you want answered up here. If you're a 1 minute trader or a 3 minute trader, you're going, well, why is this market stalled? Well, that is giving you a pretty strong clue. That's the reason why, because you've got a volatility trigger on 15 and the market is now going to just within the spread of that candle. Ultimately, it may well reverse, but the expectation is that you're going to see congestion. And as I've said many times before on these sessions, if you're not in a position and you see one arriving, then you've got to sit on your hands and wait and be patient. If you have a position, then 99 times out of 100 from a personal perspective, I will close out that position because I don't particularly want to sit through. If it's a profitable position, it's an easy decision to make. If it's a losing situation, then that's a more difficult decision you've got to take. But if we're in profit and we see this arrive in a slower time frame, or even indeed on the chart we're trading, I'll close out pretty much every single time because I don't want to sit through it. If the market carries on the same direction and just bypasses it, which sometimes they do, that's fine. But that's the decision you have to take. We had another one here. This was another example. Spikes up, the market moves. It never really got outside the range of that candle, and it's just sitting there and sitting there. You know, that is a long time. That's, bear in mind, these are 15-minute candles. This is a huge amount of time to be sat through a congestion phase, and that's the emotional pressure which is then squeezed onto you. Let me just pass back to Anna for a moment. Are you okay, darling?
Yeah, of course.
Can I just pass? I'm just going to pass back to Anna. I'll go and just check out, make sure everything's working fine on the platform, on the other workspaces, and then we'll come back over maybe.
Right, welcome back. I've actually got the pound Aussie up at the moment, and it's actually quite interesting because, as I said, this is my typical profile. I have my my Renko, which is set at, let me have a quick look. It's actually on an ATR, but it's actually delivering, suggesting 3.98 pips per brick size, which for scalping is actually quite a slow, you know, you have to wait. Quick thing about Renko. Renko doesn't have any time in it. So when I say this brick size is set to 3.98 pips, those 3.98 pips may go through this market in a matter of seconds, minutes, 5, 10 minutes, who knows? Because it won't complete until this value has gone through. So it's a way of also gauging momentum and speed, and it's just a great way to have in combination with a time chart, because as I said earlier, not only does it smooth out the price action, but it gives us a sense of whether this market is fast moving or not. And with this particular pair at the moment, we've had a nice move in the pound, and in fact, as David has said, has shown, this is the 12-minute for the pound Aussie. We've had a trigger of the volatility indicator. These are these two purple dots here, and that tells us as this move lower, was outside of the average true range for this particular pair. And as David said, what often happens is, often always happens, is the price then retraces back to within the spread of the candle, which it has done here. We've had a certain amount of buying coming in. Now you'll notice also it's actually hit this support line at 91.75. This is price-based support. Now the way this indicator has been developed is where you have a solid line, it simply means that it is a stronger level. Where you have a hatched line, it is not so strong. They still work. You see here the price didn't actually get any further, but that is a strong line. And what that means is for the price to carry on moving lower, it's going to take a lot of volume to come in and actually break through. And what the lines also do is they then point out to you where the price is likely to go next. So that's on a time chart. So we know why this move lower has come to a temporary pause, if you like. So it's had a big move lower because it's also the London Open as well, which adds its own volatility. And this is what we can expect to see. It's no surprise to see the reaction in the price action. At the moment, as I said, it's sitting on 91.75. It's got a 5 in it as well, so that adds another level of strength, if you like. And if we wanted to see has that volatility been replicated, let's have a look up on the, or we could go to the 30-minute. Yes, we also had a volatility trigger on that. So it's just confirming, first of all, it's confirming that the pound is very volatile. And if you wanted confirmation of that, I was actually looking on my Twitter feed, but those of you who may or may not know, let's have a look, where are we here? All right, on investing.com, you use the options market, and it tells you if a currency pair on these different time frames, which is overnight, 1 week, 2 week, as we see it along here, how volatile they're going to be. Now, this is the overnight values. I can't actually get an overnight value here. You see all this has gone completely skew with, because the implied volatility for the pound for cable, I wouldn't say it's off the chart, but it is very, very high. But somebody actually posted the numbers from I think a Bloomberg terminal, and it's really, really spiked higher. No surprise, because we've got the election today. Let's get a better look on the euro. Let's have a look at the euro. Right, this is the overnight euro implied volatility. It's up at 13%. That tells us that there's going to be some, some say dramatic moves, but there's going to be movement in the euro dollar today. But we know that anyway, because we've got the ECB later on. It's Christine Lagarde's first outing, if you like, on an interest rate decision. There's the press conference. How's she going to handle it? No one really knows. She's certainly not she doesn't have the clue about economics, and she's much more of a political appointment. She's certainly not like a Draghi. So the market has then said, the options market has said, well, the implied volatility, expect big moves. Let's have a look at dollar yen, for example. What's the implied volatility on that? Well, it's 8%. That's not. How does that compare with a week ago? Well, it's slightly higher than it was a week ago. What about a month ago? A month ago, it was way down in 5. You only then have to go and look at the charts for a month, and you can see, and if it's in congestion and narrow ranges, that then the two marry up together, and that then tells you that trading that particular chart, reversal, your tactics, you either have to adjust your tactics, and if it's a very, very narrow range, you may have to go and look at another pair, as it were. You want volatility, you perhaps don't want too much, but you certainly want something that is going to cause a divergence and cause these pairs to move. So I can't get the overnight. Let's have a look what the pound. Well, even on the week, it's down. Is it 40? I can just about see 14%. I try and find the tweet, but it's safe to say the pound is going to be fairly lively today and overnight. Now,
what was the buying? What was the on the weekly?
The weekly on which one? On the pound.
Sorry.
on cable?
No, on the positions.
The CFTC?
Yes.
The COT?
Yes.
Right. Yes. Interestingly, on the pound, on cable, the futures, I think the shorts had increased by something like 33,000, and it wasn't sure, as Paul said, he wasn't sure whether that was just, did the market know something that we didn't know, that there's going to be a hung parliament or maybe a Labour victory, or is that just hedging? You really can't tell who's holding all those short positions anyway. So suffice to say, it's going to be lively today. Right, let's just come back down to the chart. So therefore, you look at the chart. How do you trade this chart? Well, there are going to be opportunities on the faster time frame, but as David said, as soon as you see the volatility trigger on one of your multiple time frames, you think, right, okay, take what's the market has offered, take it off the table, and go in again. And in fact, what have we got here on the 12-minute? Yeah, we had a bounce off there, and we've now had a candle to say that there has certainly been some buying coming in. On the Renko, it really hasn't. If you'd missed this little bit of a move away, what would you be doing? Well, you'd be waiting for a break, a clear break away from these strong levels of support and resistors. That's if you want to trade anything with the British pound in it. You may say, no, I really can't. It's too much for me to handle. I'm not, it's not my thing. It may not be your currency anyway. So we look at this. We know there's volatility in the euro today because we've got the ECB. Let's go back to the euro Aussie. What's that been doing? Well, not an awful lot. We have had an attempt to break from the VPOT. What's interesting is we've got this resistance here, as shown with the volume point of control in both the hourly chart. We've got the 12-minute chart, and we've had this little move lower in the 3-minute. But it is what it is. It's you look at these charts and it tells you the state of the price action, what kind of market state the price action is in. And that also begs the question is, you have to understand that, and you either then have to use appropriate tactics because this is the only way that you can trade the chart in the condition that it is at the moment, in the state that it is at the moment, or you look for a chart that suits your preferred tactics. One of those preferred tactics is a reversal trader. So there's been a nice move and you are literally waiting for the price to reverse back to its mean, as it were. And in that case, you then have to hunt around for a chart that meets the criteria for your particular tactics. And again, this is explained in the program as well. You as a trader, you have to decide, what do you like to trade? And what do you like to see happening on a chart? Do you like to see lots of congestion phases, consolidation phases, because you like to do maybe a kind of break, or do you wait for reversals based on candle patterns, 2-bar reversals, shooting stars, hammers, whatever that criteria, whatever that list of criteria you put together for a particular a trade setup, as it were. They each carry different approaches to risk management and even to money management. And again, this is what is explained in the program, and it's certainly beyond the scope of this webinar to go through the factors that you have to consider for reversal trading, breakaway trading. But if you think about it logically, and once you know what the chart is doing at the moment or not doing, which is often the case, then it makes sense. And if you want an analogy, we use a sailing analogy. You've got the weather outside, you take your little boat and your sailing boat, and if it's blowing a gale, Are you actually going to go out? But you think, okay, well, I am going to blow again. I'm going to still going to chance it and go out. Well, you know, what sails do you set? Whereas it's a nice sunny, calm day, it's a whole different set of tactics. So that is what we try and explain. And you know, there are people out there who say, oh, this is a strategy, it works in all markets, all markets. Or does it? All markets, all timeframes, all conditions? Of course not. But once you recognize those conditions, you can then, you know, you are in control. You are in control of, you know, what is happening. You say, okay, this is what I can see. This is how I'm going to approach it. It's not you know, oh right, well somebody's told me this strategy. I'm just going to throw it at the charts, you know, willy-nilly, as it were. Right, just to go back to Dave, what was the thing about you know, the pound and what have you? Did you say about the postal voting?
No, I didn't.
Oh right, basically the whether this is correct or not, we have quite a high turnout in terms of postal votes. I think it's like 1 in, I don't know, is it 20% already?
Yeah,
it's got a large percent, no, quite a significant percentage of the electorate has actually voted. And I had never realised this, that parties that they don't count the votes, but they're opened and they're turned over, and what have you. And there was a comment by a Labour, not a Labour, a BBC correspondent, Laura Kunsberg, who gets an awful lot of abuse on Twitter and what have you. She basically made a comment that it wasn't looking good for Labour, and she's going to be reported to the Electoral Commission. Well, that's all by the by. We don't know, and to be honest, until the results come through. But that has added its own kind of level of volatility as well. So at the end of the day, I think it's going to be a fun day. Do you, David? And very much looking forward to it. Right, I think that's a question. Are you sorted out there now?
I've answered the question, yeah.
Oh, right, fine, brilliant. Okay, right. We've actually come to the end of the session. Is there anything else you wanted to say, darling?
No, that's it.
Is that it? Am I going to wrap up today?
That's entirely up to you. I don't mind doing it.
Okay. Well, all I'm going to say, and I'm going to pass back to David. Before I'm going to pass to David, we're not, as it's Christmas, this is the last session that we are having in this format. We are actually going to be moving to a new webinar provider. So therefore, it will involve signing up again. We're actually going to change how we're going to do these sessions as well. And it's a case of if you could keep an eye out on my personal blog, on my Twitter and on my Facebook page, and the links will be posted there. For those of you who are customers, quantum users, either the indicators or the program, we will be developing a separate set of webinars. We've got more flexibility with this new platform that allows us to do more things, but you will be contacted separately about that. Is there anything you want to add to that? That's pretty much.
No, I think that's it.
That's pretty much it. I'm going to pass back to David, and this little piece of price action. One of the things here you also have to look at, and again explained in the program, is this is what we call a primary trend lower. This is a pullback or a secondary or minor trend, and rather than a full-blown reversal, and it looks like the primary trend is now going to be reinstated. And we simply look at what the CSI is telling us. Let's go back, let's go down to the 12-minute here. What have we got? We've got the euro still falling, and we've got the Aussie still rising. So the indicators are also telling us that, you know, this pullback or reversal would have appeared on something like the 5-minute chart, but it looks like the primary trend is still, you know, in play, as it were, and it's also being supported. The bearish tone is being supported by the fact that the price action is below the respective volume points of control on the hour, on the 12, and on the 3 minutes. So support and resistance, price-based and volume, all adding their own pressure, if you like, to the price action that we see at the moment. Okay, I'll pass back to you. Is that okay?
Thanks, darling. And I've moved over to the Aussie yen purely because we were seeing this strong buying of the yen coming in here. We've got the Aussie is also up here as well, starting to get into an oversold. This is on, where are we, 5 minute time frame, starting to get into an overbought situation. We can see here the euro down here, it's still selling off as Anna had, and we've got the Aussie buying up here. So just to wrap up, yes. First of all, I know it's probably a little bit early to be wishing you a happy Christmas, but you know, happy holidays, we should say. So just want to wish everyone a happy holiday. If you're new to this particular webinar, this is where you find all the indicators and details of them on quantumtrading.com. Currently available for MT4, MT5. As I said to who was it? Who asked the question? Chris. As I said to Chris on the chat box, the license for MT4, MT5 covers both platforms. So it's not a separate license. So you buy whatever indicator you buy, you can run either on MT4 or MT5. It's your choice. You create a quantum, what we call the quantum trading dashboard, which gives you your management of your indicators, moving them from platform to platform. You can move from MT4, MT5 yourself at any time, backwards and forwards, live, demo, whatever it is. You can do that for yourself in that particular dashboard. NinjaTrader 7 or 8, both available there. Again, the choice is yours. You either run on 7 or 8, whichever platform you prefer. TradingView, and coming soon, as you see up here, we've got TradeStation International. This is both for TradeStation Securities, which is TradeStation 10. And also for TradeStation Global, which runs on TradeStation 9.5. And the TradeStation Global platform is a unique relationship between TradeStation and Interactive Brokers. Interactive Brokers delivers the data feed. I have it set up myself. So it gives you the opportunity, it gives you the double whammy of access to trading through a fantastic platform like TradeStation, but it also gives you the leverage of trading through a brokerage, a very deep discount brokerage like Interactive Brokers, who are one of the biggest. So it's a great relationship, and it gives you that advantage. You can trade all the markets, you can trade spot forex through TradeStation, which is fantastic benefit, and that's one of the reasons it was set up some time ago. So that's all coming soon, and we're working on porting the indicators over. We've done the majority of the work, but there's quite a lot of bug fixing we've got to sort out, and tweaks and this and that. We've set up the enablement system. That's got to be tested, so it's bulletproof. So there's a lot of work to do, but that will be coming within the next 2 to 3 months, certainly in the first quarter of next year. In terms of that's Anna's site. I'm sure you're familiar with Anna's page, and you can find the latest blog posts there, and all the books there are available on Amazon. In terms of the education, this is where you'll find it, quantumtradingeducation.com, the complete forex trading program, which is exactly what it is. It says what it does on the tin. It covers everything you need to know to understand this market. This market is complex but not complicated, so you need to understand everything to do with it. We cover all the aspects, the relational, the technical, the fundamental, how to trade, what Anna was talking about, tactical approaches, developing your personality, understanding your psychology, which is one of the key modules. It's so important that you understand what it is that makes you tick, and therefore trying to find something which will suit you, not only in terms of the time you have available, but also in terms of your risk profile, your personality, and what you are going to find most comfortable doing in the trading environment. Because if you can find that, the chances of your success will rise exponentially, because you're doing something you enjoy. You're not fighting your personality. You're actually doing something you enjoy. We have traders in the forum who are trading multiple times a day, 10s, 20s, 50 times a day. That's what they do. That's what they enjoy. We have other traders who maybe only trade a couple of times a day, or maybe once a day, or maybe they don't do it daily. Maybe they're on the daily, weekly time frames, the 4-hourly charts, and so on and so forth. it doesn't matter. There's no right or wrong way to trade, but you have to find out what works for you. If you've bought one indicator or even a group of indicators, it doesn't matter. We always credit you. So if you want to step up to the Forex program, we will always give you credit for whatever it is you've spent with us to date. That applies, as I say, whether it's one indicator or you've bought the full package and you want to upgrade and invest in the full program. The full program includes the full set of indicators as well. So you get not only the education, but all the tools as well. It's all there for you. This is the trading room, VPA Traders, where we support you. Anna and I are there most of the time, and we will be happy to answer questions. Obviously, it's a trading environment, so you know we're in there pretty much all the time, answering questions or putting charts up, or other students are putting charts up, and just having. It's an environment where you're in a friendly environment, learning from other traders, and we support that ourselves as well. If you want to drop us a line, we're more than happy to answer questions. Anna at annacooling.com or David at quantumtrading.com. Either of those will find us. We're happy to answer those, so do keep in touch.
They can email for the new links to the webinars if they want.
Yeah, and drop us a line if you just want to make sure you receive the new details of the webinars, what we're doing in the coming new year. So just drop either of us the line and we'll just keep you posted as to what's going on. There will be some minor changes on Anna's site as well, but you know, it'll all be very evident, certainly through the Anna's Facebook page, this site and elsewhere. So you'll find all the details, I can assure you, and we'll make sure it's all very public so you can find out where to go and where to sign up for the new series and what we're doing in next year. All that remains is for me to thank you for coming along today. Hope you've enjoyed it. If you are trading the pound, please just keep an eye on the spreads, on the betting, and the implied volatility. And you know, as I say, it all kicks off at 10 p.m. our time tonight, and then the volatility. And the first. Is how the you get a feel for what's happening. Yeah, the first area that is likely to report is generally one called Sunderland West, East or West, one or the other. They like to pride themselves on getting their result out as quick as possible. They literally do it as a military operation. It's quite fun. It's hardcore labour. And it is a hardcore labour seat. And I'm not saying it will be indicative to the results of the night, but it's always a good indicator. So it's certainly one to watch. So if you're in the UK, we sit up through the night because it's just a fascinating experience and we enjoy trading it as well. So I hope you do too. So happy holidays to everyone. We are back later on this afternoon at 3:15 our time. It's 3:15 in the afternoon. You're more than welcome to join us for that one. We will see you there. If not, enjoy the rest of the trading day. Enjoy the rest of the run-up to the holiday season. Have a great holiday, and we will be back in the new year in a slightly different format, but we will be back, so please don't worry. Thanks again, and I think we've answered all the questions. Hopefully we have. Yep, good. Glad you've enjoyed it. Thank you for your kind comments, and as always, thank you for your support through whatever social media you do come back to us on. I know quite a few of you do, so it's much appreciated. So thank you for that also. We will be carrying on working. We want to get TradeStation rolled out, and I think the next one after that is probably going to be multi-charts because it's in the same language, but not sure on that at the moment. Maybe something else will catch our eye. But there we go, and have a good day, and we will see you again soon, and bye for now.